Hey traders, a very warm welcome to you. So in this short series of videos, what I'm going to do is I'm going to talk about one of my favorite traders, Linda Bradford Rashke. I studied her probably 7 to 10 years ago, all of her stuff. She's got a Street Smarts book. She was kind of publishing some information. She had like her own little website. I'm not sure if she does anymore. Hedge fund trader, I believe, but a very good trader. She was in the New Market Wizards book. I liked her approach to setups. I liked the fact that she was day trading and swing trading, and she kind of outlined her stuff. She back tested things. It sort of resonated well with me. I took a lot of her setups and strategies, blended them into my own flavor and used them myself, and got some really good success out of them. Anyway, so I thought what I'd do is I'll revisit some of her strategies that she's got. You may not be familiar with them, so this might be brand new for you. I want to see how they're working in the current market conditions. So we'll look at them in terms of the indices, commodities, currencies. Let's see if their setups still occur. Right, so the first one I want to talk about is called the turtle soup pattern. Right, crazy name, I know, but there's a reason for it. If you know about Richard Dennis, he had his turtle traders experiment, and he got a group of guys together, and basically, to rush the story, I'm not going to do it any justice, go and check it out on Google, but they were literally trading a breakout strategy. So they're waiting for a specific kind of setup that would get them on an explosive trending move. His theory being once he got on the move, you could get a lot of juice out of the market. Anyway, this is the complete opposite of that. This is taking advantage of false breakouts. So a bit of a comedy here, turtle soup. In other words, you're blending up the turtles who got it wrong. So I like this kind of thing because I think fake outs are a good trade, not from necessarily because it happens all the time, but you can quantify your risk on a fake out. If the market's pushed to a high and failed, your obvious stop point is going to be above that high. Anyway, let's look at the rules, then let's check out some charts. So the first part of the rule is today must make a new 20 period low. And by the way, this is for buys, obviously sells, it's just reversed. So a new 20 period low. The prior 20, and this is a swing trading, by the way, guys, so it's a 20-day low effectively. The prior 20-day low, you've got to have had that more than 4 sessions ago, so more than 4 days ago. You can't have kind of a downtrend that's constantly making new lows. It doesn't count. It has to have made a new low, a new 20-day low, so fresh, really new territory, bounced up for at least kind of 4 days, and now it's retesting that low. Now the trigger for the trade is once it falls below that previous low, you're going to go long as it pushes back above it, and she recommends putting a buy stop in a few ticks above that prior low, and then you put your stop loss under the current day's low. So let's look at that on a chart, and let's look at a couple of charts, and let's make some sense out of it. What I've got here, I've got a Japanese US dollar JPY, I've got a crude oil, I've got a copper. Let's pick one out. Let's go with some crude oil. I haven't looked at crude oil for a while actually, guys, so this will be a good fun thing to look at. Right, so the idea is want a new 20-day low. I can see one actually has popped out straight away here. This to me looks like a new 20-day low. Let's get the drawing pen out and let's highlight it. That looks like a new 20-day low. Is it a new 20-day low? I think it is, because the last low was here, so you've got at least 20 days between that and that. Fine, so that's one. The next time we hit that low period, let's just check the numbers on this one. 42.77, okay. So we're looking for lower than 42.77. It looks like it's going to be this one here, 42.23. This looks fine. It's a low, a 20-day low, another 20-day low, and it's been more than 4 days since that last low. So as far as I read the setup, this is long. So we are looking to go long as we cross back above that level. So if I just put my thing here so we can see where we are, guys. Right, that's this low here, the prior low that I marked out. This is the low that we're now approaching on the day. It would be this first green candle with the tail on. Okay, so as it pushes below the level of 42.77, we are now have a buy stop at 42.77. Can I draw that with my drawing pen? Let's try and see. I think I've got away with it. Yes, I'll put my little dot there. So yeah, good. 42.77, that's our buy stop area. The low of this day is 42.23. Okay, so that's going to be our kind of stop loss for the trade, right? We don't know what's happening during the day. It can go as low as we like. It can keep going lower and lower. All we know is we've got a buy stop of 42.77 plus a few ticks. So let's call it 42.80. The market pushes back up. We're filled at 42.80. Our stop is at 42.20, say. That's a 60 cent risk. That's not too bad on crude oil. And look at this, looks like it worked out very, very nicely. Next few days it pushed back up. Her recommendation is trailing your stop loss. I'm not sure how you best do that. Perhaps you could use a moving average. Perhaps you could kind of ratchet it up as you go. That's obviously something to look at, and perhaps you could test different things with that. But that looks like a very nice, successful and profitable trade. And actually, if you look at this one here, I think we've got another one on the other side. I hadn't spotted this. This is a 20-day high. And the next 20-day high occurs. Obviously, this is a 20-day high here, but this is 1, 2, 3, 4. Actually, this probably does count, doesn't it? That's a 20-day high. That's another 20-day high. More than 4 days. You are short as you come through that high, and actually it's working very nicely. So it works well for a trending environment. What it's not going to work very well for is a breakout situation, but for me it's quite nice because the stop is quantified. Let's have a little look on copper. Let's not go into too much depth with it, but let's have a little look. We've got a 20-day high here. Whoops, the drawing pen disappeared. There it is. We've got a second one here, and if we look, the high of that was 2.72. High of that was 2.73, so that's correct. New 20-day high, new 20-day high, more than 4 days in between the two. Again, that worked very nicely, and however you'd exit that, you would be in profit. Your next one is going to be probably, in fact, you've probably got another trigger, I guess, around here. 20-day high, yep, more than 4 days, and you're in profit. So, this is a nice little strategy. It's working well. Let's have a look on yen. I know yen's been trending. Let's see if yen would have absolutely hammered us with that. Did we get any on the long side? Probably not, because there's your 20-day low, and that kind of affected a lot of things, didn't it? Do we have anything here? You see, well, the good thing about it as well is it keeps you out of all this stuff, guys. It keeps you from getting involved in any of this because you have that 4-day rule. So even if you get, say it does trigger and you get short, you lose a few ticks on that day, but then after that you're not caught in a brutal uptrend move or a brutal breakout, because the whole point is you don't get involved in it unless you've got that 4 days in between. Last check and then we'll move on to another setup. High 118.62. Was that triggered? No, it's not. So it's good. It keeps you out of some of the bad trades. It sort of quantifies your risk and keeps you risk capped to some of the trades that don't work, and it's got potential to run when the trade works. Just needs that exit criteria refining, whether that's a trailer, whether that's the end of day 5 or whatever. In fact, I bet if you did some more research on it, I might have a look at myself, and if I have some findings, I'll put them in a future video to see exactly different strategies for exiting. But it's something to look at. Maybe if you don't use it as a sole strategy itself, you can implement it with a current strategy and know that it's over time it's profitable. So if you add that with a current strategy, maybe you've got something that works for you. Anyway, guys, I'm going to do a look at some more setups from Linda Bradford Rashke, and maybe some more setups from other traders that I found online. We'll analyze them, we'll see if they're effective and see if they're worth looking at in some more detail. If you like this type of video, give it a thumbs up. Do not forget to subscribe if you haven't already. Hit the subscribe button for more videos like this from me and other traders on this channel. And of course, if you've got any comments, any thoughts on this turtle soup setup, then stick them below. I'll read them. Be interested to hear what you guys think about this trade. Okay, guys, take care. Bye bye.